What's up everyone? Welcome back to Earn It, Save It, Invest It. In this video, I'm going to be breaking down HIM stock and why it's been going down lately. After they made a deal with Novo, it jumped significantly. Everyone thought the short squeeze was just going to squeeze all the juice out, but yet the stock is still actually going down this week. So why is it going down, and when should you expect it to go back up? Should you be starting to put in money now? Should you be waiting a week or a month? I'm going to kind of break that down really quick. So if you can, please give me a like and subscribe. I really appreciate everyone who's been watching these videos. So let's go down really quick. Why is HIMS down? So HIMS is at 22 right now. It's down about 9%. Today's Friday, March 20th. Here's the Novo deal. So as you see, it went up about 40 to 50%. It went up 71% to the peak, basically. But then since then, it's been down 18%. That was March 12th. It's been down 18%. It's still up 40% since March 6th. And as you can see, that's about the same spot as where it was right after the Novo deal got announced. So is it going to go below that? Well, to kind of give you a short, HIMS and her, it posted its best weekly gain since the Novo deal, right? It rose about 57% that week. Now, for a stock that goes up and down this much every month, when you look at every month since 2020, essentially, right? It's like a double-digit mover every single month. Now, usually when that happens, when you're getting a 50%, a 36%, another 50%, you have 70%, you're getting some really big moves, and yet that was its biggest move ever in a week, was 57% up. So it's still pretty significant. The shorts, they're still there, right? As of March 18th, Robinhood has 88.59 million shares shorted, which is still about 42%. That's crazy. So the shorts, according to Robinhood, have not been squeezed at all. I mean, at all. It's gone up. Everything looks good financially, right? When you look at the revenue, it's up 59% year over year, 2.35 billion. Now the net income, if you know HIMS at all, they've been spending a lot, they've been investing a lot. They've been investing a lot of their money, so their cash flow is bad and their net income is because they've been spending a lot. So it went up 2%, about 2 million, not very good obviously, but again, why it's not, hasn't gone up, it's fine. The adjusted EBITDA is 80% up. Operating cash flow up 20%. Free cash flow is down 71%. They spent a lot. Subscribers went up 13% year over year, and it went up 28% on how much they are charging the monthly subscriber, right? So, or at least the monthly revenue per subscriber. So if you did $90 times 2.5 million subscribers, you have what they say is going to be around their range, 2.7 to 2.9 billion in 2026. So I think they're going to easily capture that revenue, if not more, especially because of the Novo deal. But again, why is it going down? I'm going to explain exactly why. Again, and they also put out, they're moving it, right here it says, moving us another step closer to our 2030 targets of more than 6.5 billion. This was while they were in the lawsuit with Novo. They still had confidence in their 2030 targets. So when will HIMS go up? Well, this is also why it's been down. The war in Iran. This is just recently. And this happened last week, where something happened. I think Trump said something on a Friday or Saturday where, oh no, the war is almost over. And it says, Trump balks at truce as attacks hammer Israel and Gulf, right? So he's saying there's going to be no truce. The U.S. is considering winding down Iran operation, Trump says. This is within hours of each other. It says earlier Friday, the president said he could have dialogue with Iranian leaders, but that he didn't want a ceasefire. So, I mean, it says the president said he could have a dialogue with Iranian leaders, but added, I don't want a ceasefire. You don't do a ceasefire when you're literally obliterating the other side. Iran projected defiance, with the new supreme leader declaring safety must be taken away from the country's enemies and its armed forces vowing to pursue them even in tourist spots. It's not calming down. So as long as this is happening, I mean, you look at the market, HIMS has a tough task. even though they had made this deal with Novo and all, the market is against it right now. This is the last week. This is the S&P 500. As you can see, energy, because the oil and all that, they went up. Everything else is down. If we look at the actual market, this is the S&P 500, down 7% in 51 days. This Friday was a pretty bad Friday. As you can see, we've had a few jumps when, Trump has said something, and then we go right back down and realize, oh no, nothing is actually happening. 7% in 51 days, 0% in 196 days. That's the S&P 500. The NASDAQ, negative 9.5% in 51 days. This is big because we're almost hitting that 10% for NASDAQ. 9.5% in 51 days, 0% in 220 days. The NASDAQ is essentially flat for 2/3 of a year, basically. That's pretty crazy to think about, right? 20 more days and it's 2/3 of a year. And then the Dow is also down 9% in 37 days, 0% in 210 days. So the market overall is not doing well. So HIMS, even though, yes, HIMS, the short squeeze and what, it's just, it has all this going against it, right? But when the war is over, HIMS will begin. I do truly believe that. People are freaking out about the stock market. People are freaking out about Iran and all that. And this is what's going to happen. And it's healthy for the market. It is healthy. I'm going to kind of explain why it's healthy for the market and why you should not be cheering for this, right? You don't want to be cheering for it, but you don't want to be this person that's jumping out the window. You want to be this person who's looking at it as, you know what? Now I can shop around for some deals. Right? When stocks drop in price, can you read that? Yeah. When stocks drop in price, it's like your grocery store going on sale, you buy more of your favorite items. I mean, this is exactly how it should be. When the whole stock market like this is going down, this is exactly when you need to be buying more. If you're an index buyer, buy more of the index. If you're an individual stock picker, buy some that are getting hit even harder, maybe that are getting hit extra hard from all this. If we're going to look really quickly, let me save this. Let me go to, this is the QQQ, which is essentially the NASDAQ. We are at negative 8% since we hit the top. That's pretty significant because I do believe we have another week or two at least of this downtrend. And then it's possible that we go back up. At any given day, once there's some kind of clarity for the war, once there's a real sign or signal that, hey, this war could be over here soon, this war is coming to an end, there will be a change, so the stock market is going to reverse, I believe, like crazy. As you can see, all these triangles, the first line is it represents a 10% or more drop. And this obviously represents it coming back to where it was, and so it kind of makes a triangle. In between triangles this is how many days. That's the gold line. It was 219 days since this one, and this was coming out of the 2022, right? This is 2023. And we're coming out of the whole thing. This is the carry trade, I believe. Oh no, this was the carry trade for August. Yeah. We just had a dip in the market in 2023. Nothing crazy though, right? Went down 10%, almost 11%. And then once it reached back to that high, not all-time high, obviously, from that one, because this is a triangle within a triangle. It had 219 days to go up, and then we went down 15%. I don't want to exactly say the longer you go, the harder you fall, because we went 427 days. We went 427 days without a 10% dip from basically November 2016 all the way to January 2018. So about a whole year. All of 2017, you could argue, is one of the best investing years, right? One of the best investing years. for an index. Obviously, if you're an individual stock picker, maybe there's other ones that were better, like Palantir or something, right? But there's still, I'm sure, a lot in going on in 2017. You could have just made a lot of money, and it was harder to lose money. The point is, we didn't drop significantly. We had a few, you had a 10%, 11%, and then we had the 23% at the end of 2018. Then we had COVID, but that was later, right? We had COVID. Look at these drops. All these drops are way bigger, and the days in between were shorter. So my point is, days in between triangles don't really represent how far or how big the drop is going to be. But I do think it does symbolize how long can we really go? How long can we go? And right now we're at 218 days, right? 427 days now. This is a lot longer. I haven't even gone through, this is 517 days, and then we have 200. We have this little dip, almost exactly 10% in 2014. But you could argue from 2013 all the way to 2015 was one of the best times. This wasn't even a 10% dip. I didn't put one in there, right? And then of course this was coming out of the great financial crisis. So, but my point is, I've been tracking this in between these 10% dips, and it seems like we're going to hit 10%, but we're not there yet. That's my point. We are not there yet. Now, if we take this line and we move it, come on. If we take this line and we move it up, we're still not even at 10%. That one is still not, no, that's not the high. So 8%, it was like 8.26 or something. We're at 8%. We have another 2, 3, maybe 7% left in us to drop from here. One thing to notice, these drops are harsh. The drops happen in 47 days. This one was 47 days, 25 days, 99 days. Now this one was just long, and that one was just insane, right? That one had a whole economic thing to it with 2022. 21 days, 22 days. Right now we're at 51 days. That's the most. Yeah, that's more than what we had from the tariff scare in March, right? Was that March? Yeah, March, February, March. We're at a point where I think we have I think the stock market's going to do one of two things. It's either going to drop a couple percent, 2, 3% over the next week, and then it can go back up. This is all dependent on Iran. I really do believe that the market is really dependent on Iran and that war right now, at least for clarity. If there was real clarity. Right now, every time Trump says something, Iran, their leader, is like, nope, what are you talking about? We're going to go harder now. So, okay, once we actually get clear, once the Iranian side says, yes, this is true, we're going to start coming, then the market's going to boom. I can almost guarantee it. But until then, I just don't see the market having any legs on going up and pushing forward. Everyone's worried about the CapEx spending, the AI, right? So all the software's going down. What's really going to replace the softwares, right? AI? What AI softwares out there that are going to take over the world, really? Everything is down. Everyone is scared. And then this war just adds more to it, adds more fear. So there's just no clarity. So once there's clarity to this war, I don't want to say guarantee you, but I'm pretty positive the market is going to boom. And I think that's when I'm going to go and put a lot of money in right away. I'm going to put some money into this account that I've been doing the $100,000 challenge for. I don't want to put too much in there just because I don't want to inflate what my whole challenge was about. But I am going to be putting some more money in there, as well as my other accounts, because I do have some private accounts as well, of course. So, and for my kids. So anyway, that's all that I have to say. If you can, please give me a like and subscribe. I really appreciate everyone who's watching. I hope you're going to be making some money. I hope you're ready for this. This is why I say be prepared and don't be scared. You know, don't be scared. Just be prepared and aware, right? And you know, I did think that the market was going to go down. What's going on out there? I was saying around September. Now it was too much of an early call. I was saying sometime around here. I sold my hemp stock around here. I was feeling like the market is really pushing it. It peaked right here and has not really had anything to go from there. I was definitely calling it early because I was looking at the average all the way up. Oh geez, come on man, I'm trying to make a video here. 427 days. If we take that one out, the average was 112 days. 112 days, including this one. So I was saying, okay, where's 112 days? Let's see. 112, right here, yep. October, so I was thinking, okay, sometime September, October, something's gonna happen. And it boomed, and then we started to crash, and then we didn't kind of crash, we kind of just have hovered and bounced around a little bit, and now we've gone down, and the war has really increased this crash. So it's not really necessarily a crash, you can call it a correction. The thing is, the stock market will go through corrections like this automatically, just because when you go through stuff, there's just like, okay, we're gonna go through a correction, and it just has to reset itself. We find a reason to, and Iran is not, you know, this war is not really finding a reason. It really is a reason. Gas prices have gone up. There are legitimate concerns to the economic, you know, impact that it could have, as well as just the economic, you know, condition of America right now. But if you're ready for it, if you have some cash, be ready to deploy. Once there's clarity for this war, the market is going to go up. I promise. Okay, I don't want to promise. I don't want to promise that, but that's what I put my money on. I'm going to put my money on that. And I did put money that the market was going to go down. I did it yesterday. I shorted it. I'm not going to show my position yet because I had shorted it and I wanted to sell it today. I should have sold it today because I had made 70% in one day, and I didn't sell it because I was at work. And so I was unable to sell it. I was just like, oh. But I do still believe that next week is going to be a down week or a sideways week possibly. I might lose 20% off that 70 that I just had, but it is what it is. You know, if I come out profitable by shorting the market after a few days, that's fine, because I plan to make a lot more money when the market goes up. So thank you for watching again. Please subscribe, like and subscribe. I really appreciate it. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.